There's a company that gets paid every time a government, a bank, or a corporation borrows money, and it barely spends a dollar making the product it sells. It's not a bank. It's not a law firm. It doesn't lend anyone a single dollar. It just assigns a letter grade. 3 letters, AAA, can move billions of dollars. One downgrade can shake an entire country's economy. It's called Moody's, and it's worth roughly $80 billion. One part of its business runs at a 66% profit margin. Nearly 2 out of every $3 becomes pure profit. Warren Buffett has quietly owned a piece of it since the year 2000 and never sold a share. So, how does a letter grade become one of the most profitable businesses on Wall Street? It starts with one man and one very bad year. 1907. John Moody was a financial publisher in New York, selling investors detailed manuals on railroad bonds. In 1907, a stock market panic wiped out his company almost overnight. Most people would have quit. Moody rebuilt with one new idea. Instead of just publishing raw financial data, he'd rank it. Instead of pages of numbers, he'd give investors a single letter. In 1909, Moody's Investor Service was born, using a simple scale. Down to C. It worked. By 1924, Moody's letter grades covered almost the entire United States bond market. In 1962, the company was bought by Dun & Bradstreet. In 2000, it was spun off again as its own public company. But the real transformation had already happened decades earlier, in the 1970s, and it would define the business forever. For its first 60 years, Moody's sold its ratings to investors the same way a newspaper sells a subscription. In the 1970s, that flipped completely. Instead of charging the people reading the rating, Moody's started charging the company being rated. Now, if a corporation wants to borrow money by selling bonds, it pays Moody's directly for the letter grade that tells investors whether to trust it. The company being judged pays for its own judgment. Critics have a name for this, the issuer pays model, and it's one of the most quietly controversial ideas in finance. But it also means Moody's never has to chase down millions of individual readers. It just needs the world's borrowers to keep borrowing. And in modern finance, everyone borrows. Governments, banks, corporations, even cities. In 2025, Moody's brought in $7.7 billion in revenue, up 9% from the year before. That revenue splits into 2 engines: Moody's Ratings, which grades debt, and Moody's Analytics, which sells the data and software built on top of it. Ratings revenue grew 9%, driven by a wave of companies issuing new debt. Analytics revenue also grew 9%, almost all of it recurring. Subscription-based income, adjusted operating income, hit $3.9 billion, up 16% year over year. One company judging the creditworthiness of the entire world and getting paid handsomely for the opinion. Running a ratings empire isn't free. Its biggest expense isn't factories or equipment. It's trust. Moody's employs thousands of analysts worldwide, whose entire job is protecting the credibility of that one-letter grade. Every rating has to survive lawsuits, regulators, and the memory of every time a rating was wrong. And the ratings business is genuinely cyclical. When companies stop borrowing, Moody's stops earning. In 2025, the company even revised its own guidance downward, citing trade tension and market uncertainty. It's a business that sells confidence, which means confidence itself is the one thing it can never run out of. Here's where it becomes one of the best businesses in America. Moody's Ratings alone runs at a 66% adjusted operating margin across the whole company. Over half of every dollar in revenue becomes adjusted operating profit. That's a margin most industries can only dream about, built almost entirely on data, judgment, and a letter grade. Net income reached $2.46 billion in 2025 alone, and Wall Street has rewarded it. Moody's market value now sits at roughly $80 billion. Berkshire Hathaway, Warren Buffett's company, has held a stake in Moody's since the year it went public. He's never sold. But this empire has a scar that never fully healed. In the years before 2008, Moody's rated mortgage-backed securities as some of the safest investments in the world. Many of those AAA-rated securities collapsed in the financial crisis, and Moody's faced years of lawsuits and government investigations over it. The core criticism has never gone away. How objective can a grade really be when the company receiving it is the one paying for it? There's also a newer risk. Government contracts have been shrinking. Artificial intelligence could eventually challenge how ratings and analysis are even produced. And because the business runs on borrowing, a slowdown in global debt issuance can slow Moody's growth almost overnight. So, how does a 100-year-old ratings company plan to stay essential for the next 100? It's leaning hard into Moody's analytics, building AI-powered tools that go far beyond a simple letter grade. Private credit, lending that happens outside traditional banks, has become one of its fastest-growing new markets. In the second quarter of 2026, revenue grew 15%. And adjusted earnings per share jumped 31%. The strategy is the same one John Moody stumbled onto in 1909. Turn raw financial risk into something investors can understand in a single glance. Only now, that glance is worth tens of billions of dollars a year. Which brings us back to the question this story started with. How does a company that lends no money and builds no products become one of the most profitable businesses in finance? Because every borrower in the world needs someone else to vouch for them. And for over a century, the world has trusted 3 letters to do it. Moody's didn't build its fortune by taking financial risk. It built one by describing it better than almost anyone else. Every bond, every loan, every government debt sale carries a quiet verdict from a company most people have never thought twice about. The next time you hear a country's credit rating in the news, remember, behind that single letter grade is one of the most profitable businesses in the world.